All right, good morning. Microsoft looking to have a pretty good morning here. Nasdaq, flat-ish. Haven't looked around much yet, but we got about 2.5 minutes. All right, so 283.94 puts us almost. That's right under the high here. Wow, that's really close to that high. We'll see what happens here with Microsoft. Let's take a look at other big caps. Apple, Amazon, both maybe perking up. Tesla sideways. Nvidia continuing up yesterday or today. Hey, what's up, Bleh? I read the description. Nice. Yeah, IBD base. That's it, right? Try to double every year. Maybe we should do something systematic around that. I don't really do that systematic thing very well, I guess. I seem to get a little more closer to that every cycle. I don't know why I just don't dive straight in, but it's tough for me, I guess. Nvidia, what else were we looking at yesterday? Roku was trying to bounce back. I'm not sure what's gonna knock our clocks off this morning here, but we'll find out. Yeah, 100% every year. That's not a bad goal. Difficult, but I think it's attainable under the right circumstances. And hell, even if you fall short of that every year, it's still not such a bad thing. You get out there a little bit. Well, it's like, oh darn, I only had a 50% year. Still a pretty good way to fall short of your goal. It's like professional sports teams that should be looking to win the championship every year. All of them, every single, even if they know they can't, they should at least be trying. All right, Crocs 11.5% earnings. Earnings. Oh, look at that! Wow, I had a trade on Crocs that would have made the entire trade. Reebok 27, Net 126, Nvidia 164, Roku 134, Trade Desk, Microsoft's up here. Our holdings so far. So I ended up towards the end of my show yesterday when it was just me and Ellie talking because it's usually not too many people here. I talked about this Microsoft trade. I did put that into action, so we'll see how that goes. Microsoft trade is basically that trend line right there with a breakdown point of this trend line. That's kind of like the stop loss, if you will, is that trend line. But we'll see what Microsoft does here. Market bounced back pretty nicely there on the Nasdaq. Tesla sideways. Apple 0.69. I've never had a more powerful yet weirdly slow computer. Just never happened to me before. All right, net 1.6. Oh man, I exited this position when it was breaking down from this structure. It looks like I guess I shouldn't have. I know the volume was low too. Damn it, I keep making the same fucking mistakes. Net looking amazing. Knocking at the doors of that high right there looks great. Zoom 2.73. You trying to start something? 50-day moving average. Some loose support. We were talking about it down here underneath. It did bounce up nicely. Nice consolidation forming here. Could be a base forming. Yeah, 48% move up. Got a 15% drawdown. Yeah. Looking pretty good. Domino's Pizza 5%. Holy crap. It's earnings season, ladies and gentlemen. 285 actual 312. Here's another one with a bit of a frozen rope pattern to it. This one looks like it's also respecting the 20-day. Yeah. There you go. You can close below it, but not twice. And we gapped up. Hopefully we'll stay above that 20-day. On Domino's Pizza, hasn't been one we've been looking at, but it doesn't break out like a traditional stock. The thing just wanders up forever. All right, there's Roku, Etsy, Nvidia, Snow, Roblox. Oh, that's Roku. Couldn't click it. Roku. All right, breaking that trend line. Declining volume this entire time. Roku looking good. Roku looking pretty good. I think last time I looked at Roku, it was in a really good spot for options and stuff. Oh, what's up, Ellie? Domino's Pizza is not the pizza I was looking for. If it keeps doing that, it is. That's kind of what I look for. I like it. Yeah, we had some Domino's. Some of the finals games we watched, and even the Eastern Conference finals. Apple. Well, I mean, on a day like today, Apple's not gonna. I mean, Apple's in a great spot overall. Just had a little pullback. I don't think it's in a bad position either. It does have earnings coming up. That's always a little worrisome. But if these earnings pops up here, any indication, I mean, dude, the Apple sales of the M1 Mac last year were just stupid. Or last quarter, it was like numbers like we're talking well over 30% growth for Mac and iPhone segments. I don't know about iPad, but crazy, just crazy, crazy for Apple. And the funny thing about Apple too, and I think we talked about this in the Power Hour. Apple Apple's so weird because it makes more money than anybody, but it doesn't monopolize any of the markets that it's in, which is very unique. Like it's not Samsung's the biggest smartphone maker, right? So Samsung's even in the US, Samsung's the biggest smartphone maker. They have less than 10% of the laptop market. Less than 10%. That's bonkers for them to be, so their whole company could essentially still double in size, which is crazy. That would take 20 years probably, but you get the gist of it. The gist of it is that, via their percentage of market share, um, man, they still got a long way to go. So they've been growing at a 30% clip forever. Forever. The whole, like almost their entire time since 2004 when they announced the iPod or 03 or whenever that was. They've been running at about 30 to 50% a year. It's really been just an amazing story from a business that, I don't know, it's just crazy. Anyway, Microsoft. My mouse is sitting here on Microsoft. Look at Microsoft. What's up, Mohammed? Microsoft. Boom. Microsoft. Look at that thing go. 153 frozen rope trade. I did take it yesterday. Took it towards the end of the day as the thing was like not wanting to go down. I'm like, oh, I don't want to miss out if this thing pops. And here it goes popping. So I took the Microsoft trade. And so far, so good. If we're going to have a couple days like this, man, this trade is almost in the bag. Trade desk. What are you doing, trade desk? So Roku, trade desk, these with the flag patterns, these are looking okay. I think Roku looks a little better than trade desk. Roku with it. I was actually, that's what I was looking at. I was going to go back to Stock Shed. Check out Roku. Oh, last time I looked at this, yeah, it was pretty close to my price target. I closed out the Roku trade. I don't remember exactly when. Where are you on my board, Roku? Oh, there you are. So 7-7. So I closed it out on this red day right there. We're almost back to normal. I guess I could put that trade on probably at about break even. I had that for October. I'll just jump out of these a little too soon. Yeah, it's about maybe just under a 40% gain from here to my price target, which was 480. Got really close to it on that run right there. And about 12% for 40%. That's not too bad. Not too bad. 0.3 for the NASDAQ. Tesla, nice and sitting tight. Just let's do that, Tesla. Right into earnings. Just sit tight. Just don't move. Stop it. Net 3%. This is the one that I'm most upset about. I closed this trade out too when it undercut here, which was a dumb move. Should have been more patient. I was patient. Actually, I closed them all out. Then I re-entered most of them like the next day, which is pretty dumb. But at least I'm getting back in. NASDAQ 0.34 now. Trying to rally back on through. I don't think we'll blast through the highs there, though. I don't know. Maybe we just keep walking up the way we were doing over here. Scary day here and there, but usually ends up higher. Rook finally taken off the market. Did they you mean their merger? Oh, they're gone. Gotcha. The merger went through. Apparently at 45.37. At least I hope so. Completes acquisition of Slack. Okay. And take this off my list if it's, yeah, there we go. And I deleted something else. Love when that happens. There's a glitch for you. All right, so net Crocs had earnings up 13% right now. Look at that. I closed that trade on 7-6. Another one I should have held on to. Most of my positions. Let's look at all my mistakes today. So I closed it right there. Supported the 50-day twice. Wow. You know, I gotta keep track of the trades I close. I don't do that. Stupid, Randy. You find good stuff. And I would have benefited from that. I probably would have held through it as well. I had Crocs till September. Yeah. That would have been bonkers. I don't know which one I had, but doesn't matter. Nets, I think Net's still in a good position. It's just breaking out from a small consolidation. Earnings are coming up. That's a bit of a concern, but it is Cloudflare. So 8.5. That gives you about, what, a week? Week or two? 2 weeks. That's 2 weeks for Net to maybe try to do something. Net is always being accumulated. It's a really good name here. Microsoft 144. What else are we looking at, everybody? Twilio. Double bottom with a handle. This one may be ready to go too. Accumulation, distribution on this one. JJ would even like that. I think. I don't know. Sometimes he sees weird things in charts. Oh, this looks good though. He would like this. NVIDIA. 174. Yeah, it gapped up a little bit. Looks like it's holding steady. Yeah, looks like the 4-to-1 stocks, but so far not affecting it, which is good. Very, very good. Yeah, let's look at Nvidia. I thought for a second about taking some type of a measured move trade on Nvidia. I don't think IBD doesn't do any kind of measured move stuff. That's not what they do. They're not really concerned about stuff like that. But market does kind of move in that type of a way. Not all the time, but sometimes. So I wonder if we can take a measured move out of this and imply the next upside right there. I mean, 254 just for fun. And it's already on its way. See, stupid computer. All this RAM and you're still slow. It's like it's not a RAM problem. 20% CPU. Wow. All right. Got distracted there. 254. This takes you up here in September 2nd. No, they do have a September 17th, which is a little bit further out. And that is a crazy ass measured move right there. Some of these measured move trades, I'm like, man, these are crazy ass percentage gainers. Like if that Microsoft one works out, that's like 760%. This one gets, depending how far out of the money you're willing to go, which is always dangerous to buy out of the money. You look in multiple, even if you go in the money, like because we're at what, 197, even if you go into the 178, you're at 200% gain. And not a lot of extrinsic value, so it really shouldn't evaporate on you that much. That's not a bad one. So that's an interesting, that's a potential trade right there. I'm not sure which one I'd go for. I'll just go for at the money, or maybe even a little bit in the money. Just call it a day. 813, that one's kind of off the table now. We'll watch this trade. Okay. How's net doing? Almost 3% now. Rocks. Domino's Pizza, man. ACMR. Oh, that's a candle. Look at that thing. It's been choppy sideways, but not in a bad way. Baynet. Not bad. Nice little tight something or other pattern. Tight little, I guess it would just be called a flat base, wouldn't it? Nobody Microsoft 1.52. Let's go Microsoft. That was your pullback on Microsoft. Wow. That's pretty damn impressive. I didn't even think about that till right now. You had a nice little pullback in the markets here. Well, the markets pull back. 3.8% for the entire NASDAQ. And this pulled down 3.5%. So it outperformed the NASDAQ. Not bad. REMX. There we go. Look at Amazon. Amazon's joining us today. 9%. Almost said 9%. All right. So not really being supportive of any type of a moving average, but it is loosely starting to curl back up here. Had a pullback. Coming back. You got to like that. Apple's joining us. CyberArk's right there. Apparently I clicked on something else. SSNC. Look how tight that is. Wow. What do these guys do again? I don't know if anybody remembers what these guys do. Cloud-based API-driven claims adjudication. That's what that says. Claims adjudication, huh? Second quarter. What do they do again? Global provider of service and software for the financial services and healthcare industries. Those are some big industries. Founded in 1986, CC&C is headquartered in Connecticut, has offices, blah, blah, blah. Some 18,000 financial services and healthcare organizations from the world's largest companies to small and mid-market firms rely on SS&C for expertise, scale, and technology. So financial and healthcare tech. Super freaking choppy. Look at that crap. And this is nicer. Had pretty good early years. That was pretty normalized. Then, but now it looks like we're breaking out of this. I don't know. Maybe this is okay. I haven't heard of SS&C and IBD in a while, so I don't know if they're on that IBD path. But got to be intrigued by several months of sideways action. I think that's such a bad thing. Oh, Lucid Motors is going to IPO? Interesting. Yeah, they do have a big factory. Come on, SS&C. All right, let's take a look. I'll pull it up into view here. There we go. Number 4 in the software financial group, Intuit, FICO, Fair Isaac Corp, and Issuer Direct. Software for financial services. They don't mention healthcare though. 84 composite rating, not too bad. 85 is considered a top stock, so one away from that. EPS change last quarter is only 15%. Sales change 5% isn't very good. Doesn't really meet any majorly bullish criteria. And likely just avoid it. All right. What else we got? Booking, Amazon. Looks like we're selling off a little bit. 0.25. Tesla down. I saw Amazon was 0.6 instead of 0.9. Tesla, a little bit of sell off in Tesla there. Still reducing in volume. I'm still super low. And Monday is earnings. So that's going to be a thing. Trade Desk. How you doing, Trade Desk? Not really super hot, but you're not dying either, so can't be too mad at you. All right, what's down here today? Looks like Atlassian's down. DR Horton. And somehow Tiger took over their top spot to the downside. DR Horton, I guess people stopped buying homes. They're having a red day. Down 5%. PLL got a hit on the chin for whatever reason. Oh, you know, I think I did read an article. Yes, I think it was yesterday or the day before about something. One of their mines was going to take longer than needed. Do something. I just looked at the headline. So that's taking it on the chin. And that's kind of some of the problem with, you know, we get excited about Tesla and about all these big runs. And while the thing's moving, I think it's good. But when it, you know, a little bit like being drunk at the bar at 2 a.m., sometimes you take something home that when you wake up doesn't quite look as good as you thought it did. And that's kind of what PLL's reminding me of here. You know, lithium sounds fantastic, but we did analysis. We looked into these guys and we're like, hey, they're not going to be doing anything until 2023. No product. They're all development until then. So why would the stock run? Like, it just doesn't make any sense. And then you see something like this, and it starts to make sense. So, all right, DHI, LAC, FUV, Las Vegas Sands, and 3D Systems is next. Where's the latency in my computer? Because it's annoying. LVS. But when it doesn't, it's not that good. Well, kinda. Real Wordsmith, absolutely. That's my other YouTube channel. That's the other one. Well, no, it's the point that anything, anything with, I mean, these are like MVIS. This is a nice little cup and handle here. Um, goes on a great rally, but but based on those rallies, some people think it's gonna continue that forever, and obviously most of them don't. The ones that do are your Teslas, which are extreme outliers, and PLL is not an extreme outlier. Yeah, some stocks are one night stands you're not too proud of. Exactly. Yeah, so plenty up and plenty down today. It looks like a little more down than up, even though we look a little bit more bullish. Prox up 9%, but 0.7 if I go to the bottom of my screen, you're going to see a lot more. Look at that, down 2.5, not 0.7. You have Tinder stocks. It's my new website, tinderstocks.com. It's all the stocks that you just want to, jump in real quick and then jump out of just as quick. Net 2%, coming down a little bit. You met your wife on Tinder? I had a joke queued, but it didn't make any sense. So I shall refrain. You're not. Muhammad with the win. I'm not married and Tinder is trash. Never been on Tinder because I'm actually married and didn't meet. I met my wife on Match.com. That was pretty damn good, Muhammad. That was pretty good. Put me in a tough spot on that one because my instincts, boom, go for the kill, go for the joke, bam. I could have been left hanging, but I refrained myself. Wow, I'm learning. A Muslim version of Tinder. If I was more in tune to the Muslim religion, I would have a good joke for that. Yeah. It used to be called Minder. Jeez, you know how many bots would be on a site like that? Remember back in the day, they would they'd be these like small dating sites. It's probably still the same way, and they would just flood them with female bots just to get you to subscribe and stuff like that. So if you're small, gender. Oh, that's cool. Yeah, there's good people on Tinder, bad people on Match. I mean, you never know. So we have Minder, Gender. Um, what would be another one? I think it'd be Black Tinder, which is Binder, or White Tinder, which is Winder. And then you've got an Irish Tinder would be Inder, Inder, or just Inder, or Inder. No, that's weird. Cuctor. J swipe sounds like JavaScript swipe. That sounds like a module you need to write there, Ellie. Get your name out there in some open source. Maybe you'll finally get a real job. You'll have this open source thing to your Cuctor, Kinder. Oh no, that's bad. It's like a daycare place. That's just that's left a bad taste in my mouth all of a sudden. I like how like we're talking about stocks and no one chats, and we start making fun of making fun of people. Chat comes to life. That's where our priorities are, ladies and gentlemen. At least we're clear about that. Clear about net having a good start to the day today. Net looky nicey. I mean, chat's getting too active. I may start talking about stocks again. I think Twilio's not too bad here. Did I look at Twilio? Let's look at Twilio. Oh, you know what stock trading tinder would be? StockTwits. Boom. I'm really surprised I don't like StockTwits more. I was actually one of the first ones on that platform. Not like the top 10, but top 50,000 or whatever it was. Yeah, it's interesting. Let's take a look at Twilio. Mohammed likes Twilio. Did you find this one on your app? Probably. 20% only puts you at 480. Let's just say 485. Let's do that and see what's what. That's not really that great a return for me. 158 going out 57 days. That's not very good. If I go to the end of the year, it's only 60%. Wow, I can't do that one. It's not something I can do. Risk is too high on that. I mean, overall, I think the setup's okay. That's interesting. Yeah, Twilio's not bad though. I mean, that is the double bottom base. That is your breakout point. We're just underneath of that. Earnings are 729. That's going to be a week from today. It's got a bullish MACD. Accumulation distribution is bullish too. There's your high. And we are above the high on accumulation distribution when it comes to Twilio. Yeah, that does look good too. Yep, JJ style. Yeah, I mean maybe this thing goes past 40 if I take my target from 45 and go 90 from 45 or 450 and make it 540. I'm sure that'll look good. But am I doing too much at that stage? Yeah, see, there's 150% going out to January. That's a little better. Look at this on the weekly, though. It's been a kind of a nice consolidation here had a beautiful run up, nice consolidation. Now we could be trying to start it again. The guarantee of that was an earnings pop. And we're in a similar situation. Not that it's going to happen that way. Probably should be something that you hedge or whatever, or buy smaller, and then buy on the confirmation of the gap. But yeah, double bottom base. Here's another double bottom base right there. And see, that looks just as wide and scary, doesn't it? And then now you have a similar wide and scary right there. Option strategy. You want to learn the option strategy? It's not too bad. I mean, in a nutshell, I mean, it's simple to me, I guess, because I've been curating it for a long time, but it's something where you've got to, identify quality stocks that are about to break out. And, I mean, that's really the first part of it. Yeah, I mean, do you want to go like in-depth one-on-one, Muhammad? I mean, maybe that's something we could do. I could just save it for the course. Yeah, I need to. I'm actually doing some work on stuff right now, so I'm not trying to jinx it, saying I got something coming because it's not coming, but I'm working on stuff. But yeah, I really try to look for, like in a nutshell, I try to look for stocks that within 6 months are going to give you at least 150%, at least 150%, 150% gain, at least. Ideally more than that, but that seems in this market that seems to be all we can get is about 150%. So let's use, well, net's already a little far gone. Yeah, we can use Microsoft, Apple. Oh, Apple's up a little bit. Nice. Twilio. So Twilio. So I mean, first of all, you have to identify if you're going to use options, whether you use my way of looking for entries or someone like JJ's way of looking for entries. I do mine in a very specific fashion for my very specific reason. So, and that's I think where some misunderstanding comes in, like with Ellie and JJ and me. Sometimes, like I'm looking for one specific thing. Like okay, so take this one for instance. We know there's a bit of a horizontal right here. I mean, it's pretty obvious, I think. Boom, horizontal. I think it's a little bit low. Now, this is a traditional IBD setup. You don't have to do these out of traditional IBDs. You could do these on any number way of technical indicators, but in my book, at the end of the day, massive gains. At the end of the day, you have to identify something that is about to move and is basically imminent. Like, okay, this is gonna go. And I don't know if that's the best way to do this or not, to be quite frank with you, is kind of how I've been trained to trade. Look for something just ready to go. So Twilio, double bottom base, poking at the breakout level. Let's just call this one ready to go. If you identify it as declining trend line, which I do sometimes, if you small cup and handle, which you could have also done here. But then you have to identify, especially if you're going to trade options, where do I think this is going to go? And so this is kind of a multi-layered thing because you have to identify all of them correctly. And that's why I say these trades have about a 25% chance of working. And because you have to get all the aspects correct. If you're wrong, if you think the market is bearish, you're not going to take these trades because you're just going to get destroyed. In this situation, what we're looking at is, okay, I've got my base. Let's look at a price target. Now, this is a traditional IBD base, and IBD infers about a 20% price target, which I've already drawn out there as about the 488. So then what I do is I go to StockShed, which is based off a spreadsheet tool that I used to have, and I would put Twilio 488 in here, and then I look for. I try to go out about 6 months if I can. Now in this particular tool, the percentage gain over here, I'm only getting 60%. The problem with options is, in reality, you're risking 100% of your bet. So 100% for 66% gain isn't a good risk to reward. It's actually negative risk to reward ratio. So this is a trade by definition I just can't take. Based on those methodologies. Now, if you were to go the more traditional breakout route, which is the all-time high breakout route, like I was just saying, I could take this and go 20% from the 450, which puts you at 540 or whatever. So 548. We can go back to StockShed, plug in 548 for the target because StockShed requires a target. Now I'm at 160, 170%. So now this becomes a more viable situation, making about, potentially, doesn't always work out this way, obviously, but 170% on this situation, right? So that's just habit right there. Okay. So you have to ask yourself, and see, this is where some judgment, sometimes it's just written on the chart, and you can just make a more quick judgment. Looks like this is starting to break out, actually, Twilio. In this instance, you're like, okay, is it only going to get to this 20% or is it going to get to this 20%? Now, IBD says 20 or 25%. It doesn't have to stop at 20%. I just like to be a little bit more careful with options because they are so volatile. That's really why I like to be more careful with these and just go to 20%. But on this particular one, this is almost like an extended target. And Twilio is still a very leading stock. Every time I talk to Ellie, he's like, yeah, they're still the only game in town for what they do. And, what they do is they do SMS services for apps, basically. So, and one thing I'll look at here, which is what this line, I'll try to look for a trend line to try to guide the trade. Most trades are guided by trend lines, and I find these extraordinarily useful to try to gauge A, the ascension slope, and B, which is what the slope will give you, the amount of time potentially for a trade to work. So in this situation, this has a pretty firm trend line here. I could go a little bit like that. So if your target is right here of 400, I could give this over here to October 8th. So first is the price aspect. And so if I go, here's October 15th. And if we go to October 15th, we go back to our original 480? 485. Go to our original 485 target, a little bit better, 121%. I could take that trade if I really wanted to. So, I mean, that's it in a nutshell, really, right there. Now, when it comes to what stocks to pick, that's maybe a bit of a damn. Domino's 10% now. Jeez. Last time I did that, it came crashing down. Of course, I was up more than 10%. Man. See, this was another one of my. This was another one back when I was doing arrows and stuff. I really like this trade. This is a long-term turnaround play here, and it gapped right above it. I guess I could have bought it, but this is one. So there's my supportive trend line right there, coming off of this low, and if you notice, it held it really nicely for the most part. Now this is the COVID drop. Otherwise, this thing probably would have just chopped higher, but. You see, I've got these were break-even points for different strike prices I was looking at: 290, 300, 310. These were the break-even points. So all these are you adjust. So there's my target. I think that was a secondary target, and they're all within this parameter, and aggressively within that parameter. And I think if you end up with these types of stocks that move out of these large bases substantially, they will be well above this target. So all I'm doing with my trend lines here, so this may make me want to buy something, because keep in mind, this was the beginning of 2020. This trade was coming on. This would make me want to buy something about 11 months away, or I guess 9 months away, because this broke out in February. This broke out in 2. This is 11. That's 9. So I'd have bought that, and I was looking at this, and if I remember right, it was a good percentage gain. Now, could I go more aggressive and try to buy something closer? I could, and I could get bigger gains, but the problem with that is if the trade goes against you, you end up losing a larger percentage of that trade. Versus if I go out here, let's say I bought something for June or July, and we broke out over here. I probably, by the time this evaporated, I probably would have lost like 80% of that, or this I would have lost 60% of. Maybe even 70, because this was an egregious move down. But you get the general point. The farther out you go, the less risk you have on the table. And so that's why I try to go out as far as I can while meeting profit requirements and buying myself a little bit of insurance. Especially just because of the way I trade, I'm a little bit weird anyways. So then we can look at the Microsoft trade. I'll show you another thing I did with that. Isn't something I normally do. I'm on the daily here. Okay. This isn't a trade I normally take, but I have seen it. I did it once or twice in 2020, and one of them worked out really well. I think the other one I got stopped out of, which is fine. But the one that worked out really well, obviously more than paid for the one I got stopped out of. So this Microsoft trade's a little bit different. This is me noticing something that could potentially continue and just kind of jumping on the back of it. So in this situation, you have a bunch of moving averages here. I think I will jump to trading view for a second here. Because the gross gains. So I was actually going over this in the crypto power hour, because we loosely talk about stocks for a few minutes. It's basically Monkeytron likes Tesla, so I get to look at Tesla every day in the power hour. So yeah, yesterday we looked at this a little more in depth. Ellie and I were discussing this trade yesterday. So going back, I'll show you kind of how this trade may work out. In this one, we had a consolidation. We broke out of it, and so this yellow line is the 20-day moving average. So what Microsoft did here is it broke out of this long-term turnaround play, which may or may not be, but I'm just going to call it for brevity's sake. So you break out of that, you come down, you test the 20-day moving average, you go up, then you have another consolidation here, all above the 20-day moving average. And then if you were to do a measured move on that, boom, you hit your target there, you can exit your trade, and the whole time you're above the 20-day. You could exit on the break of the 20-day also, which gives you almost a measured move. Now, this isn't a really big measured move, but it's just one leg. And the measured move is essentially based on the psychology that I did it once, I'm going to do it again. And you will see that happens fairly often in stocks from time to time. Here's another situation. Microsoft breaks out of a sideways consolidation, has a nice little move up there. I'm kind of considering that all part of this, even though it's its own little consolidation, but it's pretty new, so I just included it. And then, so here's another one. Undercuts the 20-day, comes right back, and you can take a measured move off that, and that would have worked out almost perfectly. Actually, I'm 1 day forward, so there you go. Almost perfectly. You give it a little bit of extra time, and you're good to go. But one thing you notice, the 20-day was not being respected. Even other moving averages were not being respected. So these are things that you can take advantage of that aren't even like massively big trades, that are just something technically that you notice, right? So here the 20-day moving average is being chopped through. Doesn't give you any edge really at all. But now we're in a situation where that has changed. Similar to what we just saw, 20-day moving average being respected. Right there. I took this measured move here, which is actually fairly large. That's a pretty big measured move. I took it from the low here. This isn't really a consolidation, and there's a minor high. I used it right there. I didn't use the major high. I was trying to be a little bit by the profits. There you go, Mohammed. I was trying to use, just a recent action. I think that's pretty good. I guess I could call it like that too, maybe. That may be a little bit more honest. But I have it like that. And then so here's your 20-day test, and it held. So we're done going down, and then boom, right there, you've got potential for 310 by August 19th on this one. And then if you notice that there's a trend line I drew right here, which is support, which almost mirrors the 20-day. So in this particular trade, I have it going up to here, and my stopping point is essentially this trend line or the 20-day moving average, whichever one I guess gets broken first. So ideally, we just hold up above, just like we do here, right? We hold up above for the most part, and some of these other runs did that as well. There we go. Should have had that done a lot earlier. So like all these secondary runs, once they breached back up above the 20-day, they never even... here it tested it, but we never broke it until we were, fully done with the measured move. So this is just a singular trade. This isn't like those other trades we were just talking about Twilio, and here's another example, stays above the 20-day. This one extends that run. Oh, no, that's my measured move, right? No, that's the extension. Yeah, okay, that's the measured move. So there you go. There you go. That's the measured move. That's the move. That's the measured move, based on the consolidation. And obviously the time scale didn't work out, but if you gave yourself additional time, that would have been way too aggressive. If you gave yourself additional time there, you would have done okay probably, but I don't know about for options. And I think those were the only examples I really had. And it's just noticing a behavior that has a potential, because like this one, the 20-day never held. So, it's noticing certain things, and moving averages can act as support. Here it didn't work out. Now we're getting back to 2009. This was back when Microsoft was sideways for 15 years. So it's just about identifying an opportunity. This has nothing to do with my normal options trading, but this is a smaller options trade that I think has a decent potential to work out. The market is, Microsoft has proven to be just a gangbuster leader, really moving where everything else hasn't. So that's just a opportunity trade right there. So if you look at something like Apple, we'll do that like a normal options trade again. Come on. Actually, let's use Amazon. Let's use Amazon for that, because I think this is still viable right now. Why are you so damn slow? Yeah, this is still viable. This is viable right now. Let's take a look at Amazon. So, this is a very traditional cup and handle pattern. And so you take a 20% from here. And just go straight up.
you're looking at about 4,200 just to use big round numbers. Just use 4,200 for big round numbers. I'm weird like that, Muhammad. I'm just so weird like that. If you want to send me some money, I'll take it. But I'm so weird. I'm just so weird like that. I will come out with stuff eventually, but I don't know. There's only like there's only a couple people here. It's not like I'm giving everything away. No one's gonna rewatch. No one's gonna rewatch this stream. Um. So yeah, 4,200 for Amazon. And all right, so 4,200 for Amazon right there. So here we can go out to January. And it's not that great. It's only 100%. But we are a little bit extended right now. And that's the thing with these options is they move really fast. So I actually bought this one a little bit early because I really like the action. I bought this one a little early. This is buying a little late. Actually, if I go to Stock Shed, I think I already have this trade laid out, and it's 200. For going to. So here's where the time component may come into play. So we do have some loose support right there. So right here is your actual support line. This is an extended support line, not guaranteed to hold, but I had one look there for October, getting to 4,200, and then you have this other one that goes out to 4,200 by February. So usually they're not going to hug this trend line; they're going to extend upwards from it. Okay, and you can try to make an assertion about which one you'd like to get in terms of an expiration. But that's the thing, you have so many options. So here you've got 183 days, 184 days. Let's go to 40 strike price just so I can maybe see something. So here, if you go out to 1015, you're looking at maybe 260. Here you're looking at 150, and here you're looking at 125. That's not bad. And then here you're looking at 100% gains. So I mean, you have to pick which time scale you think is actually going to work out. I think it's better to have more time, but the problem with me is that I never end up waiting for the entire period. And I have a lot of trades that would have worked really well that ended up not. Look at the weird little glitch there, Ellie. Look at that little line. That's funny. Just every once in a while, it's kind of random. This one is filled. This one has a little white line, just like a 1 pixel gap at random intervals. That's crazy. What if it's because of my screen? Because this isn't probably exactly a 1080p monitor. That's funny. I wonder why that is. Anyway. But yeah, so you can choose. If you choose to be more aggressive here, you just run you do run a bigger risk of it not working because it takes too long to consolidate prior to an uptrend, right? So if you go by 1015 here, if you buy the 1015 one for 200%, that means it has to get right here. And then, there's always a possibility that it just meanders around a little bit. Maybe goes into another sideways consolidation here. And then never quite gets up there. And then it breaks out and goes like that. And then you're a month too late. But if it goes straight there, the profits are amazing. I'm just a little bit nervous about that. One strategy could be if you wanted to kind of layer. You could do multiple. You could have one shorter, mid-term, long-term. I mean, I don't do that, but that's something that's obviously possible. So, you never quite know how it's going to go, but that's basically what I do. You have to identify when things are going to start moving, and then you have to plan for the move. And sometimes you'll find something really gangbusters, like I don't know, I can't think of one off the top of my head, but sometimes you'll find them where sometimes you'll find them where the market is not pricing in a big move. It just isn't in the options market. It'll show you. And so let's just say let's say your target was 4,200. We'll use this as an example, but let's say it's like 5,000. And you'll see something like going out 6 months for about a 5 or 6 or 7 or 1,000% gain or something like that. You'll see these crazy numbers from time to time, and you have to ask yourself, am I just greedy? Is my price target way too high? You have to look for where you made a mistake. And if you can't find you made a mistake, you need to double check if the market's making a mistake with the way it's pricing those options. Those are really great opportunities. They don't come along extraordinarily often, and especially in this market, because 2020 was a big bullish market, so option premiums are up, and every option has premium built into them. It's kind of like PMI on your house. You want to get past that 80% of equity so that you can get the PMI off your house, because it just holds you down. So if you can find a situation, usually it comes with the market, less than it has to do with a specific individual name, but like actually, if you look at this Amazon trade, this was an okay example, because when I had, Amazon has been sideways for a year, has been in a relatively tight range, and when I looked at this trade for Amazon, a 286% gain going out to October, so not quite 6 months. That was about 4 months when I started looking at this. I don't know when I put this on here; it doesn't save that data, but. So 4,200 expiration is 1015 with a gain of 286. That's a really good gain out of a really high quality stock, out of a potentially really good setup. So this was about June I was looking at this. And so that's 286% out of Amazon going out, potentially, what was that, 4 months? Yeah, about 4 months. 286%. I mean, that's amazing. To be quite frank with you, I think that's amazing. So in this circumstance, I think for me, it was well worth jumping in early, because you see what happens. That 286% gain for the 3650 strike that's still not too bad. 216% if it gets to 4,200. So, I mean, that's still not horrible. But again, that's to October, and I'll make an additional 50%, 70% gain by buying that a little bit early. But still, even buying right now when it's, I don't want to say obvious, but when it looks likely, because we already had the breakout candle, we have a pullback, now we're trying to go back up. This is not a bad time to buy this. This is actually still actionable if it's something you want to do. You don't have to, but so you're only up 2.5% from the breakout point within IBD's 5% buy rules, and you're still, if you go out to October, which is probably not as wise, you can go 148. If you go out to November, December, 125, that's still decent. And like I said, January to 100% is passable, because you're at about a 1-to-1 risk-reward ratio. Even though you're not going to lose 100%, in reality, I'm probably being too cautious on every aspect of this. But I don't know. I just feel it's warranted. But that's just me. So, but still 100% gain going into the end of the year for a position. That's not a bad thing. Dumb question time. I should have that as a section of something. The IBD rules, the investors, well, it's just IBD. Investors.com. It's that site we look at from time to time. Usually several times a show. I mean, not every show, but most shows. Investors Business Daily. There is a book on my website. If you want to buy an affiliate link, which will pay me probably like 12 cents. I don't even know. Go to resources, go to books, and then you can buy, it should be at the top, is this How to Make Money in Stocks. You should buy this one too, by the way. It's Ellie just took, I don't know, Muhammad's was pretty good, but Ellie may have taken Muhammad's for the win with the good comedic exit. That was amazing. Tinder for investors. Ellie, let's start it right now. Let's do a startup. Tinder for traders. We'll call it To Tinder. Oh, that's perfect. It's To Tinder. I'll bet you that's not taken. There's probably a template out there. There's been so many of these damn websites done. to Tinder. Ah, someone got it. That's the entrepreneur in me never dies, by the way. I always buy books that say how to make money. It is kind of a generic title, isn't it? I didn't. This book didn't get me into IBD. IBD got me into the book. But I'm like, how to make money in stocks? Like, what a shitty name for a book. But this book has actually been in print for a pretty long period of time. Now, this is the green book. There's different books. This is, believe it or not, the more recent one. It's 11 years old, still extraordinarily viable. But if you go to William O'Neill, there's an orange book, which is a little bit older. Yeah, here you go. How to Make Money in Stocks. I think this may be the original one. Oh, it's an Audible book. I don't know when the book itself. See, there's the orange book. That's a little bit older. You want the green. The green book has 100 charts in the front of it. So he's updated it from time to time. Oh, Desk Diary 2005. What's that? Data Glance Resource. Wow, $50. I've never seen that one before. William O'Neill's great though, man. Successful Investor, that's another William O'Neill one. Yeah, there's the Getting Started, Success. Yeah, trilogy. That is a good trilogy to get. I did read Getting Started. Maybe I did. I know I have the red one. I don't think no, I didn't buy Getting Started. Maybe I should just to take a look at it because I'm actually kind of writing my own Getting Started informational series for investing. Anyway, 7:30. I gotta go get my kid up. Let's take a look at the markets before we bounce. Amazon going for it. We got the Nasdaq 0.5. Tesla still stagnant. Net continuing. Okay, I thought it was pulling back. It is not. Net is continuing. I think if that could be actionable still on this time scale. Yeah, I shouldn't have. Damn it. Didn't get back in the net. Can't win them all. D-Dog, Zoom, ANET, Square, 1.64%. All right. Oh, Square. How come I didn't notice that? Square blasted off the past 2 days. That is good. That is really good for Square. Twilio. Yeah, so it's trying to go past the breakout point today. It's going to attempt the breakout today. This should be at about 40% above average volume. I don't quite know if we're there. Yeah, earnings are in a week on Twilio. So far, some of the earnings we've seen have been blockbusters. Crocs, Domino's Pizza have been blockbuster on earnings. Not to say they all will, but yeah, it's always tough to jump in like that. Apple up 1.3. Amazon 1% today, so booing the NASDAQ right there. There's our Apple coming back strong. Amazon. And we already talked about Amazon. So I think things are looking pretty good. I think Net's the only one. My REMX consolidating today. Not too bad. Trade Desk. And not as bullish as some of the other ones. Tesla flat. And they're still quite a bit down today, but the mega caps are trying to make up for it. Oh, Space is kind of down in the leaders of the downside today. Imagine that. Space almost looks like a bear flag. Not impressed with Richard Branson's garbage event. I wasn't very happy with it either. AMC Tiger, Hexo. Jeff Bezos was a little bit more fun because the rocket thing only takes like 5 minutes. And you get the launch, which is always cool. And you got to see him come down. That was pretty cool. I'll watch it after the fact. So, all right, guys, I got to bounce. You guys have a good one. I got to roll. YouTube bleh. Thanks, bud. Ali Muhammad, whoever else is here, have a good one. I'll see you guys tomorrow. Bye.